So the tech race is heating up, and China just dropped their new AI solution. Now it's a new chatbot that's going to go head to head with OpenAI's ChatGPT. Now GPT was the fastest AI app to ever hit 100 million users. They crossed 1 million in 5 days and achieved 100 million in just 2 months. However, they have over 800 million active users a week, so the growth is exponential. Adoption is key and the speed of it is important. Now, China is starting to make their own chatbot to rival GPT. It signals how Beijing has the ability to develop AI for their own economy and for the global south. Western tools and help are needed. Now, Alibaba's new Quen AI app just received more than 10 million downloads during the launch week. Shares of the company jumped by almost 5% higher. Now, this new AI app isn't just a tag along in Alibaba's business. Sure, it's going to change their shopping platform and it's going to drive a lot of retail sales. But the aim is to create a fully functioning AI agent. It will start off in China, but before long, it's going to expand globally with an overseas version. Now, compared to ChatGPT, China has one big advantage, and that is open source. And because of it, Quen can provide more flexibility and can be easily customized. So companies can easily adapt it for their own use case. And whether you're running a store or power grid, Quen is more flexible. It's also free to use for many cases, plus the model is optimized for lower resource usage. You don't need to burn a pile of cash, compute power, or energy to keep it running. And this puts it at odds with the US model that is closed. Plus, it costs a bomb to use GPT at scale compared to the Chinese models. And this means if Chinese AI can reach intelligence parity with US models, they will blitz through the adoption curve. Now, getting users is not a problem once Beijing closes the final intelligence gap. When we compare open source models between the US and China, the game has already been won. Llama is an open source AI model similar to Quen. It is developed by Meta Platforms, the Facebook company. Now, for over 18 months, Llama was easily leading the Chinese model. But in July, Quen's downloads suddenly went to the moon. It doubled their downloads in just a single quarter, surpassing Llama with nearly 400 million downloads. Systems built on Quen now account for 40% of new language models. Meta's share of the market fell by 15%. And this is terrifying for US AI for a whole variety of reasons. The US is fighting an uphill battle. They don't have an industrial base or retail ecosystem like China to harness the true power of AI. China's payment space alone is an incredible avenue to drive AI adoption amongst the masses. And this is putting aside all the developers. We are talking about normal people, you and me, using AI. China can drive AI usage because they have a unified payment rails within the country itself. The majority of transactions in China are done using either WeChat or Alipay. Over 1 billion people in China use WeChat alone for payments, and that's 85% of shoppers. Alibaba is at the top spot, which means they have the customer base to influence and collect data from. All this benefits users, companies, and developers using the Quen model. In fact, Jensen just admitted the big AI threat coming out of China. The open source nature of it allows for massive adoption with very little pushback from the world.
That China has very good AI technology. They have many AI researchers. In fact, 50% of the world's AI researchers are in China. And they develop very good AI technology. In fact, the most popular AI models in the world today are open source models are from China. And so they're moving very, very fast. The United States has to continue to move incredibly fast. And otherwise, the world is very competitive.
And this introduces a big problem for the US. They are burning through big stockpiles of cash trying to keep the dream alive. Hundreds of billions in data centers alone, and this disaster is being funded by a lot of debt at high interest rates. Chinese companies like Alibaba can fight the war sustainably using customer revenue. It's a very different model. As we mentioned before, the US is trying to create Skynet and run as fast as they can using borrowed money. But unless you suddenly reach AGI, you will eventually hit a wall of defaults. Now, Alibaba plans to turn Quen into a fully operational AI agent. And that means allowing customers to shop hands-free, and it's going to build a bigger ecosystem around it. And that means mapping, travel booking, and even education. It's possible because there's already a big unified user base. It's the same reason why AI in general can scale faster in China, because they already have an existing industrial base. If we look at the recent AI sell-off, Alibaba still fared better. It is still up by 10%, while others like Meta are down by nearly 20%. The market understands the fundamental difference. China is playing the AI game sustainably. Their advantage is in real life applications or what people call AI inference. The US, however, is fueling their growth by debt and deficits. If China manages to drive mass adoption, especially for everyday consumers, this will put a massive squeeze on US AI revenues. And without earnings, how can you service the debt? Now, take OpenAI's revenue for example. They have committed to spend over $1 trillion on AI development. That's $1,000 billion. Sounds great, but their annual revenue is only $13 billion so far. Plus, over 70% of it comes from consumer subscriptions to ChatGPT. People paying $20 a month to use GPT with less restrictions. Which begs the question, what happens when China creates a cheaper consumer model? It's not a leap to go from open source to consumer closed source. Chinese solutions will most definitely undercut ChatGPT and really squeeze Sam Altman's revenues, which is why Trump is scrambling to take control of the Fed. He needs to bring interest rates down at all costs to prevent an implosion. Borrowing money needs to get cheaper, and for AI companies to refinance their debt, there's no other option left. Now, the Federal Reserve is going to be even more beholden to Trump. Hassett, who is part of the Trump gang, is the front runner for Fed chair. In other words, he could very well replace Jerome Powell in May next year, 2026. Now, if you didn't know or you don't know who Hassett is, he is an economic advisor who's a big duff. He lives and breathes interest rates cuts. And here's the hilarious part. The selection process for the next Fed chair will be led by none other than Scott Bessent. Now, I'm sure he will be impartial and select the best person for the job. This is an absolute disaster. If you think the debasement trade or the debasement trend is over, ladies and gents, it probably isn't. The Fed is going to start to be filled by the Trump squad. We already have Stephen Moran there. He has been calling for a weaker dollar for the longest time. He believes it will make US manufacturing more competitive. And that translates to massive rate cuts. And if you think this disaster can't get any worse, Bessent is definitely going to follow what Trump wants. Whoever the pick is, we can expect Bessent to follow orders.
You're not taking that job.
Brett, there are, I think, 340 million Americans now. I think I can safely say that I will not be the Fed chair. I think President Trump will make a great Fed chair. He has an open mind. He understands monetary policy better than a lot of people on the Fed.
Now, how soon will the decision be made? Well, it could come as quickly as Christmas, and that is less than 30 days away, which means a huge shock could come to the markets. Now, if Hassan gets in, most definitely in 2026, we will get massive cuts. That is going to be bearish for the dollar. Trump is going to reset your money and cause a bigger inflation problem down the road, including asset inflation as well. Now, the problem here is the inequality divide. The rich are going to get much richer with all the rate cuts. And this can't continue forever, and Trump's control of the Fed is going to push things off a cliff. Since 1965, the US middle class has been getting squeezed out of existence. It has shrunk by 11 percentage points to just 45%. A basic family budget is now above 6 figures, which is insane. The cost of childcare, housing, food, and healthcare, they are all rising. Now, what happens if interest rates drop, triggering a dollar collapse? All imports cost more and squeezes the middle class even more. The only beneficiaries here will be asset holders. Now, I don't like it, but this is just the reality. Trump isn't trying to reverse this. His policies, ironically, are accelerating the timeline. Now, while the economy is rotting, the US stock market is booming. But can this bifurcation last forever? The rate cuts is just one part of the story. Another narrative driving this exuberance is Trump promising $21 trillion in global investments. Now, according to reports, There's a big hole in Trump's promises. That's not surprising to us, but this information is being priced in into all the stock prices. There's over $11 trillion missing, maybe even more. And for those that were found on the White House website, only 7 trillion might have some semblance of reality, which means if the 14 billion black hole isn't resolved, we have a big valuation gap to justify here. It's like telling the neighborhood you won $1 million and you're going to throw a block party next week. Everyone's cheering, fist pumps to the air, everyone's preparing to party next weekend, but you don't have the money. So either you cancel the party and you crash the hopes of everyone, or you borrow the money to throw the party, driving yourself into debt. It's a lose-lose proposition. And understand the scale of this. The US economy could be in store for a major rug pull. Trump's 7 trillion alone is going to add massively to US GDP. If all the projects are delivered according to the timeline, we are looking at an additional 5% GDP a year. That's half of the pandemic rescue package. It's on par with the railway boom in the 1880s, and it's bigger than the '08 TARP bailout from Obama. It's an incredible amount of money. But how much of this is priced into US stocks? And how about the remaining 14 trillion in amorphous pledges? Remember this iconic speech.
We have over $17 trillion being invested in our country in 9 months. It's now just about ready to crack 18. And by the end of 1 year, we will have about $20 to $21 trillion invested in our country. That's more by 10 times the highest amount ever invested in any country ever before. It's the largest amount as an example. So if we have 20 or 21 in 1 year, 21 trillion. Think of what that is. That's car factories, it's AI, it's everything. They're all coming back.
You can't make this stuff up. What if the money doesn't manifest? The entire economy and the markets will get a big shock. A lot of manufacturing investments would evaporate away into the ether. More importantly, the money going to AI might just dry up. Now, Trump's global shakedown is also not working. A lot of countries, from South Korea and Japan all the way to Europe, they're giving him the runaround. Now, if we look at sovereign investment pledges, there isn't enough money on the line. There might be 900 billion from Korea and Japan, but a lot of those are loans that needs to be paid back. It's not free money, folks. From the EU, less than 41 billion. From the Saudis, less than 26 billion. From the UAE, just 61 billion. None of this can fill up Trump's $14 trillion black hole. There's not enough shakedown money around, and countries are not that stupid. Giving Trump money is denying their own economy of capital. So realize 2026 might be Judgment Day. Trump seriously needs the money to come in, or else how can we justify all the lofty valuations in US stocks? It just doesn't make sense at this point. But let me know what you think. Will Chinese AI pop the tech bubble? Can Trump really get his $21 trillion next year? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.